Lars, welcome, a warm welcome, and thank you so much for joining us.
Thank you very much for inviting me.
Where are you joining from today?
I'm joining from south of France, where we have our summer house. So it's quite hot, close to 32 degrees already. So I'm staying indoor, but I can just show you that it's a nice view here with the
Wow.
Mediterranean. So we stay here 2 months every summer.
Awesome, awesome. Looks awesome. I can also turn my screen around, but you'll just see a box. So I'm sitting in a green box right now. I typically run these sessions from my home studio. We had some technical glitch there, so I had to quickly locate and found the Impact Hub. So boom, boom from Tabby to Ostermalm, and we are running this. But Lars, thank you so much for joining us. And let's kick off our conversation. And let's start it from the point like, how did the journey of angel investing start for you? What drew you to this area?
Well, it started quite a long time ago. As you
Mhm.
know, I started full time within venture capital 40 years ago. And
Mhm.
before that, I had a small shop, a company with my brother. We sold clothes and sporting articles.
Mhm.
I worked for a bank. I did my military service. I worked for a foundation promoting stock savings called Aktiefrämjandet. And I was very much interested in stock savings, but also in entrepreneurship. And during my years at Stockholm School of Economics, I also worked for an investment group called Hexagon at that time. Not the same Hexagon as today, but I was responsible for marketing and investor relations and information. And I thought it was very interesting, of course, but I thought it should be even more interesting to be on the other side, so to say, to be someone involved in the operation in the companies. And also venture capital is like the essence of capitalism,
Mhm.
where people are helping entrepreneurs to create good companies. So that was the main reason for starting in this area in 1984.
And how did like compared to where we are, so 1984 and 2024, see it's a long journey between those two data points. But
Yeah, yeah.
how was it like investing at that point in time?
Well, it was quite lonely. There weren't
Okay.
too many investors. There weren't too many startups. There weren't too many co-investors. There weren't too many lawyers that could write like a shareholder agreement or an option scheme or anything.
Mm, mm.
So you had to do a lot of things yourself. And yeah, that was a little bit early days. I would say that the US, of course, was very much ahead of Sweden, and the UK also. The rest of Europe was behind, so Sweden was not the last country to develop, but
Mhm.
it was quite lonely.
Okay. And very interesting analogy you drew from US, Europe, and then Sweden. Where would you place us now? Where is Sweden in this grand scheme of venture capital investing startup ecosystems today?
I would say that Sweden is now somewhere between 1985 and 95 in the US.
Uh-huh. Okay. Okay. And in terms of is there something which sets us apart from, let's say, so there is Silicon Valley, also starts with the letter S, and then there is Sweden, also starts with letter S. Is there something which is uniquely different between these two ecosystems?
The good thing is that we have serial entrepreneurs, and a lot
Mhm.
of people have been able to to make a lot of money that they could reinvest. So we have
Okay.
the culture of both giving back, but also to reinvest, and entrepreneurs helping other entrepreneurs and so on, which is a very good thing. But it takes time. It has taken about 30, 40 years for Sweden to come to this point. And that's really one of the main criteria for a viable capital market, you can say.
Mhm. I think it's always a time game because even when you're setting up a venture fund, for example, it's a 10-year horizon, 8, 10, 6, 12, depending on. And then you start seeing exits after X number of years. And then on multiple generations of funds, you see more exits. So you're absolutely right that there is a time factor involved there. But you also mentioned something very interesting that entrepreneurs here are reinvesting, giving back. And that probably is one of the driving factors where we are strong on impact, Nordics and Sweden. So we are more into purposeful innovations. Um, Tell us about your early days in the Swedish SVCA, or how we call it, Swedish Private Equity and Venture Capital Association. What were the reasons, or what triggered its start, and how was the and how it has been growing over the years?
Well, to start with, it was more like a place for people to meet, all kinds of people. It was investors, it was those few venture capitalists, lawyers, auditors, entrepreneurs, everyone could be a member, and it's still like that. I think SVCA is the only association within venture capital in the world that also accepts individuals and entrepreneurs as members. So that was my idea was just to create something, a monthly event, a lunch meeting where people could meet and get to know each other, because very much in this industry is built on trust. You get to know people, and you like some people and you trust some people, and then you can make business. You don't make business with people you don't trust or you don't know.
Very interesting. So early days of community formation. I work a lot with community, Startup Grind, Founder Institute, and all. And I think this is a very interesting kind of conversation that we have kind of initiated here, that kind of putting together all diverse parts of ecosystems together, bringing a monthly momentum around meetings, and then that builds the trust barometer up, up, up as it goes, as people get to know each other. Amazing work over there. You have also been investing as an angel investors. How has that progressed? Do you use a particular entity as an individual? How have you structured your own investments or portfolio?
Well, as I said, in the beginning was very lonely business. So I
Okay.
invested from my own pocket, a lot of trial and error, in some cases sweat equity, where I helped companies. I took stock options that in many cases didn't use because the company didn't work. And eventually, in the beginning, I took a lot of risk because I didn't have any other investments except for unlisted startups, more or less. So if the company failed, I lost a lot of a big portion of my at that time very limited fortune. So a lot of risk, a lot of strange companies that I invested in, strange startups, all over the world, you can say. So crazy today. And also in the 80s, there was leverage. People borrowed money to make investments. So that was even more stupid. And of course, like everyone else, I lost a lot of money in stupid things. So I learned the hard way what not to do. And eventually I started to take less risk, only invest in companies that I at least understood what they were doing, and investing in more companies, a portfolio with some risk diversification, and follow-on investment in those companies that worked. And today it's even more, what should I say? I take less and less risk. I only invest in companies that I really understand what they're doing. I only invest in companies where I know some of the other investors and that we can work together. And also, for practical reasons, the companies should be located in central Stockholm so I can walk to them within a few minutes.
Okay. So that's a major evolution on the thesis side. So less risk, uh, more understanding, closer to your area of expertise or what you're passionate about. Other investors are there, and walking distance, of course, it's an absolute criteria. But any particular verticals that you like as an investor to go in?
It's also based on trial and error.
Okay.
I avoid a lot of things that I've invested in the past that didn't
Hmm.
work. For example, deep
Okay.
tech, biotech, it's too expensive. Many
Mm.
cases, clean tech is too expensive for an
Okay.
angel. I don't do gambling because I don't like to make people,
Mm.
unhappy. Um, and yeah, it's to summarize, it's digital services, mainly business to business, that could either help the company, the client, the customers to earn money or to save money. And normally with a SaaS model or a platform.
Okay.
So it's not that I'm an expert, it's just that works for me. For other people, it's maybe more deep tech or hardware. I
Mm.
don't like logistics. I don't do e-commerce. I don't do consumer goods. I don't do fashion. I don't do music. A lot of things
Okay.
that other people can do that I don't do. As someone asked, health tech, yes.
Mm.
But I'm not an expert within that area. So I co-created a company called Curos, where we invest in digital health service companies. So we have about 20 companies in that portfolio.
Okay.
And I'm one of the founders of that company. So that's also one way to do it. If you're interested in a certain area, you can
Mm.
create like a subgroup for that with some people who are experts in that area.
Okay. And generally, like when you are investing in a company or supporting them, what's your general way of working? Are you kind of passive, active? Like, what's we'd like to learn a little bit from your experience. What works best for you?
As I normally say, it must be fun, and
Okay.
because no one is an angel investor because they're forced to do it. Everyone is an angel investor because they like it.
Yeah.
And it's much more fun if you're an active investor. If you're just a passive investor, it's much better to buy listed stocks
Hmm.
where you have liquidity and everything, because this is a long-term game. It's normally 5 to 10 years, up to 15 years. And well, there are coming some questions here. So long-term game, you have to like the companies, you have to like
Hmm.
the people around the companies, the other co-investors. That could create a lot of problems if you have an investor coming in that have a total different agenda than the other ones.
Hmm. Okay, very interesting. I see questions coming up, and I've also requested our participants here to put up more questions. We can blend them in as the conversation is going. And somebody has asked a question on angel syndicates, but I would say let's step back and do a quick check on how do you think, like, what's your general capture of the Nordic ecosystem when it comes to maturity of angel investment? Do you think it's in a very early stage, we have crossed the early stage, and we are in a growth kind of phase where more and more angels are joining in, or are we at a mature stage? How would you see it from as an angel investor, the state of ecosystem right now from angel investment side?
I think it's quite mature, and I think it's very good. Of
Hmm.
course, it's centered around the big cities and also around universities and the bigger incubators. It's tougher if you're in a remote area, regardless if it's in Sweden or in Norway or in Finland or in Denmark. But I think it's quite good. I think it's quite good. And as an entrepreneur, it might be better to move your company to where the investors are, because it's also like in football or in whatever, the competition makes you stronger because you have to compete both for talent and capital and everything. So it's not good enough to be a king in a very small village. You have to compete on a national and then international scale.
Okay, great. Now we come to Shahzad's question here. What do you think about angel syndicates in your experience in the Nordics, for example, Angel List and so on? Like how do angels usually cluster together their investments?
You can probably say that, okay, on one extreme, you're you're alone and investing. On the other extreme, you have crowdfunding. And in the middle, you have syndicates. I think the best thing is some kind of syndicate, or at least some kind of angel network where you syndicate maybe on an ad hoc basis with other people that you trust. You can complement each other when it comes to both capital and competence and experience and whatever, and time to help the companies. Crowdfunding, I don't like that much, because as an investor, you don't learn anything. As an entrepreneur, you get a lot of passive investors, and eventually some of them would like to sell their shares. It might be some gray market for the shares, which means that it's normally just only sellers, no buyers, because the company is not well known. So the valuation of the company will go down, and that will make it harder to raise money later on at good terms. So try to avoid crowdfunding. That's my advice. If it's not for example, to finance a piece of theater, or a book or an app or whatever, where you get something directly, but not to become a shareholder in a startup. So syndicates, very good. But smaller ones, not like hundreds of people, but maybe 5 or 10 or 15.
So smaller syndicates are a thumbs up, and your advice to entrepreneurs is that if you're going into crowdfunding, go for non-equity based methods of crowdfunding, where you can either you're building an impact startup or an art startup, anything which is consumer facing, where people have interest to support your cause in some way. Awesome. Let's take another question here from Mahiar, and that relates to one of the questions I had was, what has been your best or most fun investment? Let's start there. Like any investments or investment that you think defines your journey over the past several years.
Well, you have to be, as an angel investor, you have to be humble in the way that you have to have a lot of luck and good timing to make good investments. You can have the best strategy, whatever, and it doesn't work anyway. Or you can come into something that looks quite shitty, and after a few years, it becomes something like a beautiful flower. And I've had a lot of failures that I thought should be very successful, and I have had a few really good successes where I thought they should be failures. And it's hard to say that this is the most fun investment I've had. All of them, I've done 80 startup investments. All of them have had close to death moments. They're couple of days or weeks from dying, mainly because of lack of capital, but also maybe because the original idea didn't work, the team didn't work, the investors, you have some investors that are complicating things for the entrepreneurs, whatever. So you have to be prepared that it's not fun every day. And then when it comes to success, this is my job. So I have to have like a steady cash flow from exits. As I said, I've done 80 investments. My portfolio today is about 20 companies. So I've had about 60 exits. Of those 60, about 2/3, about 40 have been successful, at least more than my investment, and 20 of them have been less than my investment or bankruptcies. And so I can't take too much risk because I would like to have a steady flow of exits, hopefully one or two every year. And that means that for me, it's 10 times the money is my aim. Sometimes the best I've had is about between 30 and 40 times my investment. On average, per investment, on average, since 1984, it's about 3.4, 3.5 multiple, which if you convert it to internal rate of return is about 23, 24% per year, which I think is quite good. It's not dramatic. It's not like not all the companies have been Spotify or iSettle. But you have to take a lot of risk if you are aiming for 100 times or 1,000 times the investment. So I take less risk.
Okay. But really great to see the benchmarks that you provided here, like in terms of 80 is a big number. So from 80, and then I think that's quite a successful rate with 60 exits, having 40 successful exits and 20 less successful. I think that's also a great ratio. And I completely agree that maybe the number, the multiple could be higher if you were more of a risk taker. So of course, but this is great track record, really interesting, and I think it's interesting um, for our community here as well as to start thinking in this way. You kind of defined a few rhythm elements, like I'm looking at one or two exits a year. So I think that's a great way of kind of thinking your angel journey as well.
Let me ask you and the audience one question here. Say that you have two different portfolios. Say that you have 10 million to invest. So you can invest its portfolio. The first portfolio is 10 companies with high risk. And you would like to put in 1 million in each company. And the other portfolio is 10 companies with less risk. So you're investing 1 million in each company. In the high risk portfolio, it's a 10% possibility that you have 35 times your investment. In the less risky portfolio, it's 70% chance that you get 5 times your investments. So the likely outcome is the same. 10 million will become 35 million. In my case, I choose the less risky one, where 7 companies are successful and are giving on average 5 times back, and the whole investment, 10 million, will give like 35 million back, which is exactly my numbers. Some other people think it's more interesting to have the chance to have 35 million. But say that company 1 bankrupt, 2 bankrupt, 3 bankrupt, 4 bankrupt, and then the 10th, which should give 35 times back, it also goes in bankruptcy. You lost all your money. All the entrepreneurs you have worked with for many years have had a very terrible time, and you have lost all your time also that you worked. So I prefer the less risky portfolio where at least 7 of the 10 entrepreneurs are leaving the scene happy and wealthy, and me too.
Awesome. So you asked this as a question, so I'll lean to the side that you are leaning on. So I'm also I'm a risk taker, but not like a big jumper into the risk, like into boiling fire or something. So I think I tend to agree with the way you approach investments. Let's see. We have some questions again coming up. Frederica has a question. When do you jump off at what stage when you are part of a project? You're
Well,
saying.
I normally stay on until the bitter end, because I think if the
Okay.
company will be successful, the valuation goes up dramatically the last years.
Okay.
So regardless if it takes 3 years or 5 years or 6 years or 10 years, up to 15 years is the longest one I've had.
Okay. Which means that you are constantly following on your
Yeah.
okay.
And
At
you
a
asked
pro
also
rata.
before if I was an active investor. Yes, I'm an active investor because it's more fun and I learn more and I think I have something to contribute. So in the beginning, I worked very closely with the company, close to the entrepreneurs. Before I was some years ago, when my portfolio was a little bit smaller and I was a little bit younger, I was always a board member and very often the chairman of the company. So I've been a board member for about
Okay.
45 companies and chairman for 25 companies. And so that I thought I was quite good in that. Nowadays, I let other people be board members and chairman, and
Okay.
I'm more ad hoc involved in the companies. So I call my CEOs quite regularly, or send an email, or visit them when I'm in Stockholm. Try to visit all the companies at least once a month, just to check what's happening, if I can help, which is always the case, that you can help as an angel.
Mm.
So,
But
and it's more fun if you're involved, not a passive
okay.
investor.
Okay. Very good. And you mentioned something very interesting here, like you have been on the board, 40 plus companies on the board or in the chairperson role, and then more hands off. What delivers more? So one part is because of course with added response there is a fiduciary risk as well associated with when you are a part of the management or some sort of oversight into the company, which of course board is responsible. So from that perspective, what would be your advice to angels? Is it good to have, like as you said, that have a regular contact with the CEOs and get updates properly, or is it important to have a board seat?
I think it's up to each individual to
Mhm.
choose. If you are a board member, it's a formal responsibility. You should be aware
Mhm.
of that. You should really work for all the shareholders. That's the aim, and that's the task for a board. Um, in some cases, it's easier to be just an investor, an active investor. You can jump in if needed, but you have to be very, what should I say, flexible. If
Mhm.
you shouldn't disturb the entrepreneurs, if they
Okay.
don't want you to be involved, you shouldn't.
Okay. Since we are discussing entrepreneurs, two very interesting points are coming in. Let me just see if I can locate the first one. Here, hold on. It was a very interesting question. Uh, Okay, has it happened to you that you loved the idea or the company but didn't really enjoy or connect with the founders? What happens in that case? Like you love the idea, but it's difficult to work with the founding team. Or Tom, I would say that could also
Yeah,
happen.
yeah, yeah, yeah. No, but it normally it starts with the team,
Mhm.
because the original idea very often never works out. So it takes when you do your first investment, and
Mhm.
I'm normally investing in the first round, external
Okay.
round. You don't know too much about the market. You don't know too much about the team, the competition, nothing. So the only thing I know about is my co-investors, and maybe they know something that I don't know, and we can complement each other. But the
Mhm.
team, you have a few hours to get to know the team. I don't invest in a single entrepreneur. It should be a team, but at the same time, I think probably 80% of all the teams are
Mhm.
not intact after a few years. So you should be
Okay.
aware of that. And it's not a catastrophe. Um, it's just normal that people grow apart. So maybe after a few years, it's just two or one remaining of the original founders. Yeah, I start with the team. Do I love the idea? It has happened. It has happened that I restarted a company with the idea without a team. Yeah, but that's quite unusual.
Very
That's
interesting.
I have a story like that in my book that comes
Mm-hmm.
out in a few weeks.
Yeah, very, very interesting points. And I think that's something, if we go to, I work a lot in acceleration space and a lot of ecosystem accelerators and advisor mentors. So acceleration space is mostly, or very early stage startup ecosystems are very strongly fixated on business plan and the idea formation itself. And they kind of ignore the entrepreneur side or the team side of it. And that's very strange because the entire early stage ecosystem is on refining the idea in a format that can you project this for 5 years? Like they would love it if you can project
Yeah,
your baby idea to a 5 year window. You don't know how the market will evolve. So I don't know. That still needs improvement because we are not working
absolutely.
hard enough on kind of building cohesive human structures.
But I
Yeah.
totally agree. And the business idea, it takes about 2 years, in my
Mhm.
experience, to know what you should do, what you should sell, to whom you should sell, and how you should sell to find product market fit. 2 years.
Yeah.
So it's a lot of trial and error in the beginning, and it's no point in investing a lot of money during that period. It's much better with some bootstrapping because in other case, you just lose money as an investor and the founders are just deluded. So before they know exactly what to do, and it takes about 2 years,
Mhm.
um, you shouldn't invest too much. You can be involved and help them to be,
Mhm.
try out things. And then when they know what to do, it takes about 1 year maybe to find out how you should sell. Um, and then you can start invest heavily in the companies.
Mhm.
So it's no point, as you say, no point in trying to sit on your desk and find the best idea because you have to be out with the customers and try it
Mhm.
out.
All right. So that's a lot of thinking points for us to kind of fundera på. Let's see a couple of more questions. So Manish has a question. You said you did a number of sweat equity deals as well. Would you recommend that still, specifically for new angel investors who want to balance active investments with sweat equity as well?
Absolutely. I mean, what you can come up with is your money and your time.
Mhm.
Time is also experience and energy and whatever. If you have a lot of money but no time, it's better not to be an angel investor. It's much better to buy listed stocks. If
Mhm.
you have a lot of time but no money, you can help companies, maybe be a board member if you would like to
Mhm.
take that formal risk, or just help out the companies and say that, um, let me buy X% of your shares for your nominal value, and I'll work for the company for free for 2 years. And then you have an agreement that if the founders are not happy with your contribution,
Mhm.
they can buy back the shares for the same price or maybe with some interest. Then it's no risk for the entrepreneurs. You risk your time, but not more. And
Okay.
if, for example, the entrepreneur is using this agreement to squeeze you out, then you shouldn't work with that entrepreneur anyway.
Okay.
So it has to build on a gentleman's agreement.
All right. All right. Let's switch a little bit to, we have a couple of startup questions here. So Marcus has a question. Hi, Lars. What are the top three criteria that you look for in a company when you choose to invest or not to invest?
Uh, Understand what they are aiming to do,
Mm-hmm.
that I like, and get some kind of that I'm impressed by the founders,
Okay.
and that I have some other co-investors that I know.
Okay.
And then, of course, all the other criteria, as I said, digital service,
Mm-hmm.
Stockholm-based. a SaaS or platform, and so on.
So,
But it's
but
quite
that,
simple. And in some cases, I decide within 15 minutes.
okay.
In other cases, it's been like 2 years where you follow
Wow.
a team. So it's really up to circumstances.
Okay.
And my normal investment, because you will probably ask that, normally I invest about 500,000 Swedish as a first
Okay.
investment, 50,000 euros, and then up to 5 million Swedish per company. Some cases a little bit more, but I like to have a broad portfolio. So about 5 million per company after several rounds.
Follow-ons. Okay.
Yeah.
Okay.
So you have to save a lot of money for follow-on investments.
Yeah. All right. All right. So awesome. I think that's a good numbers range that you talked about. When it comes to, again, a question on founders. When it comes to founders, do you look for any specific personality traits when deciding if you will invest or not?
Yes, I avoid innovators
Huh?
because they are too narrow-minded and they are too much in love with what they have uh, what they have invented. I like business people. They should be able to sell. They should have a lot of energy, a lot of resilience. At the same time, a long-term view, at the same time as they are very flexible. They should be likable. They should have relevant experience, relevant education, and yeah, not not too old. I think
Okay.
it takes a lot of energy
Mm.
and also it's good if their family situation is simple. Much easier if they are single, no
Mhm.
responsibility. They can work 24 hours a day. Um, they don't have to take a big salary because they don't have too much fixed cost and so on.
Okay.
So
Think,
someone that's like 26, 28, 30 years old, worked a few years, good education, um, smart, likable.
and low fixed cost
Yes.
and time to commit. So I think time to commit is very important for the early stage of startup building. You need, because without, so startup is a time machine. You need to put time. Um, let's see. So Joshua has a question on angel outreach. I'll answer part of it. Like, of course, platforms like Connect are a great way for you to take your ideas to investors, but over to Lars as well. Like, what's the best way to reach out to angel investors directly? So if startups would like to directly reach out to angel investors, or do you respond directly to direct requests from startups? How does that work?
Well, I think as in all cases where entrepreneurs are raising money, you should note exactly what you're looking for, what you
Yeah.
should have the money for, but also what you need more than money. And then you should try to learn as much as possible about the potential investors, regardless if it's a venture capital firm or an angel, to see, does it fit? Does my company fit his or her criteria? Does he and or her fit my view on things? Because I get about 2 proposals a day to invest, and most, of course, in some cases, very interesting. But I'm right now with 20 plus active investments, fully invested. I've done 2 this year. Last year, 0, because it was a dozen follow-on investments, because you have to, when time's a little bit harder, you have to keep the companies you already have invested in alive.
Okay.
Get to learn more about the potential investors, and of course, reach out by someone who knows the potential investor. That's the best advice.
All right. All right. Mahyar has a question. How do you help startups typically prepare for an exit scenario? Do you negotiate it or set it early in shareholder agreement, or do you push for it? How does that work?
I've been involved in quite a lot of exits and taking initiative for that, but I never start with the exit strategy when I do the investment. It's more something you have to be open for, because in more or less all new markets, there are a lot of startups coming up. After a few years, there is a consolidation. So either you buy companies and become one of the market leaders, or you're acquired, or you're left behind with not the critical mass to invest in marketing and product development, and then you die, or you can find a very, very small niche. So you have to be very, very close to the market and the consolidation trends and whatever. Keep in constant touch with competitors and potential acquirers. So I've been quite involved in many of those processes.
Okay.
But I never start with, yes, in 5 years we should exit like this. It doesn't work like that. You build a good company, and you keep your ears open for potential exits.
Got it. Got it. We have more specific questions coming up. We have around a few minutes to close off the talk as well. So Philip has a question. Can you share your experience and tips for ticket sizes at early phases of angel investment journey? Hypothetical, if you had 1 million SEK, how would you approach first few investments and ticket sizes if you were to start today as an angel investor? Any important areas learning that you have in the initial how do you approach investing again as the company need more capital over time? So how would you allocate? I would just take first 10 seconds of that. Philip, that's part of what we kind of look at our investor accelerator. I've posted the link here to Lars' profile, my profile, and then the entire investor page that we have, where you can go and check details of investor accelerator, where we give you tools to kind of play different scenarios on how you build your investor profile and your thesis. But Lars, over to you. If somebody had 1 million SEK.
I should join an angel network and co-invest with other people, maybe with a little bit bigger amount of money to invest, so you can piggyback on their experience and their money. Because you can't invest in just one company. You should probably invest in at least 3, 4, 5 companies, and maybe not all the money up front. You invest, you save at least 2/3 of the money you have. And if you have 1 million and you save 700, you have 300 to invest. That's very little. So maybe you're not invited to invest because the companies don't want to have too big cap table, too many shareholders. But if you're a friend of someone who is investing, then you can piggyback on that person and take less risk by doing that, and then follow on next round, because there's always a next round. If the company goes well, they need more money. If it doesn't go well, they need more money. And then you can choose. If you like the company, you can invest more. If you think it's an attractive valuation, you take more than your pro rata. And it's always a possibility, because the founders don't have money to do that. So there's always a room for increasing your participation. If you like the company, but you think it's quite expensive, maybe you take your pro rata a little bit less, or you let other people invest and you save your money for other companies. So yeah, join a network and join other investors.
Okay, very, very good advice. And I think that's what we encourage. That's what investor networks like Connect, that's the purpose we serve. And then there are other networks. If you are, let's say, if you are in Finland, you can go to FIBAN. And within Sweden, of course, there are micro networks and other types of networks. So if you are in Sidos, you will have Investera or Sidos. So I think get to know. It's like if you are a startup founder, you need to network in your space and in the entrepreneurship side. So if you're an angel investor, don't do it as Lars was saying initially. So at one point of the continuum is a loan investor and then a crowdfunding, but you need to be somewhere over here in the middle where momentum and magic happens.
Yeah.
So very interesting points over there.
I thought you should ask me if I'm investing in sustainability, because that's a
Yeah,
very fashionable thing.
yeah,
As I said, I avoid bad things.
okay,
I try to do good things, but I'm not focused on sustainability. I think it's more important as a consumer to be aware of things. So that's why I took my T-shirt that I bought 1980 at Bloomingdale's in New York
okay.
for $18, which was like €8 in today's value, or €7. So 44 years old T-shirt.
Well,
That's sustainability in practice.
all right. I think that's great. I think we need to think of that because we are trained as consumers, and consumption needs to happen. And the more we consume, the more profit gets meted out to the companies. But I think
Yeah.
a different business model is needed
That's
going
why
forward.
digital services are good. It
Yeah,
doesn't do that much harm.
yeah. I remember I worked very closely with a couple of global automotive companies. And the general feeling you could sense in the boardroom was that how can we get customer segments to buy cars more frequently? Like the car should not be there. So initially, like 60s, 70s, 80s, car was an asset which can live a long time. But then the switch in car industry has been on, can we make it a consumable?
Yeah.
Like so that's like 80s, 90s, and 2000s were around that. And then now the renting and sharing model is coming in because that created that huge disparity in the market. But Lars, this has been such an interesting talk, going
And
into so many.
we just covered a little corner of everything we could discuss.
Yeah, but this has been so interesting. Um, If we close off our discussion in terms of any general advice you will give to new angel investors who are just starting out, like what
Well,
would be the best way to go
the best
for
way
them?
is to invest 250 crowns in my book.
Okay.
It's only in Swedish, Mitt liv som affärsängel, coming out, I
Hmm.
hope in September. I just, well, the printing will start this week, I hope.
All right.
So 250 crowns to learn everything about how to do, but also how not to do.
All right. And what's is it kind of a, if we go a little bit, let's take 1 or 2 minutes to get a discussion around the book. How have you structured it? Is it more like going into the different type of investments you have done, or the journey? How would
It
like to
is.
learn. Okay.
As I said, I've done 80 investments. I've chosen
Hmm.
about 12 of those that I
Hmm.
discuss in more detail, very close detail. And then, in many cases, in some cases, failures, some cases, good companies, some cases, bad companies that I've turned, or we have turned to something good. And I describe in detail exactly what we did. And then between those chapters, it's my learnings from different aspects. So it's written with it's easy to read, but it's very detailed. So I think it should be good reading for most people. But it's in Swedish. It might be an English version next year, depending on the
All right.
interest.
Awesome. Awesome. That's great to hear. And we'll, of course, as soon as it's out, let us know, and we'll spread the word out in the larger Connect community as well, Lars. But for today, a big thanks for taking time out.
It was
Thank,
a pleasure.
yeah, thank you so much.